Zero hedge. Dollar, well, not dollar, de-dollarization accelerates. Guess which country I'm going to talk about? What did Lindsay Williams say? Watch China. China's the big one. What have I been reporting out to you guys for several years? China making these deals with other countries, the systems we have in place, international stuff, they're creating their own. They're having meetings with a lot of other countries known as the BRICS nation, Brazil, Russia, India, China, etc., and several others. And I've said this before, I'll say it again. Where's the American representative? Where? How come nobody invited us over there? How come we don't get in on that? They're getting. Remember the book in Obama's hand? A post-American. What was that? Obama book. A post-American world. Obama's reading material. In fact, the post-American world. Right? Obama already had a book in hand as he was getting off Air Force One. Remember that one? A post-American world. You don't suppose what I'm about to read you is another nail in that coffin. Which is why we all need to make as much money as we can, as fast as we can, to pay off our debts, get out of debt, credit cards, all that stuff, house, knock it all down, the payments, which you owe, so that when whatever happens, it's a lot less stressful for us. Oh wow, I don't have a mortgage payment, or wow, I don't have two car payments anymore, these cryptos or whatever, paid it off, kind of a thing. Anyways, de-dollarization accelerates. China readies their currency, the yuan-priced crude oil benchmark backed by gold? What? So that's why China's been buying all this gold lately, as in the last several years, out of control. The world's, and this is from oilprice.com, but it's posted on Zero Hedge. The world's top oil importer, China, is preparing to launch a crude oil futures contract denominated in Chinese yuan and convertible into gold. As Gold member said from Austin Powers, I love gold. I like the smell of it, the taste of it, the texture. You know what, Gold member? So do I. But if you're a Gold member, I'll be Silver member. Because I like silver just a little bit more. I think there's more upside potential. Anyways, potentially creating the most important Asian oil benchmark in allowing oil exporters to bypass US dollar denominated benchmarks by trading in yuan, etc. The crude oil futures will be the first commodity contract in China open to foreign investment funds, trading houses, and oil firms. The circumvention of US dollar trade would allow oil exporters such as Russia and Iran, for example, to bypass US sanctions by trading in yuan, according to Nikkei Asian Review. To make the yuan-denominated contract more attractive, China plans the yuan to be fully convertible in gold on the Shanghai and Hong Kong exchanges. Last month, the Shanghai Futures Exchange and its subsidiary Shanghai International Energy Exchange, INE, successfully completed 4 tests in production environment for the crude oil futures. And the exchange continues with predatory. Sorry, I was thinking of a U.S. institution. Predatory. Sorry about that. Preparatory works for the listing of crude oil futures, aiming for the launch by the end of this year. Not the end of next year, the end of this year. We're almost there, aren't we? The rules of the global oil game may begin to change enormously. Luke Roman, founder of US-based macroeconomic research company FFTT, told Nikkei Asia Review. The rules of the global oil game may begin to change a little bit? No. A lot? No. Enormously. And who are you? What gives you the right to say that? Founder of US-based macroeconomic research company. They research the macroeconomy. Huh. They're seeing a massive red flag. US stuff. Oh. Sorry. Guess who's going to get the blame for all this? Donald Trump and his damn trading. He put the damn trading thing on China the other day. The levy or whatever that was, right? He's going to get the blame no matter what. I already told you this way before. Way before he even stepped in office. Whoever the next one is, they'll get the blame for everything. If the economy's great and everything's taken off, they'll get the credit. But if it's not, if you're playing musical chairs and the music's still going, you look great. I'm the man or the woman. Hey, yeah, man, vote for me again, yeah. But when the music stops, everyone sits down and you miss the chair, now you take the blame. Oh, it's all your fault. That's how it's going to go down. So it is a mechanism which is likely to appeal to oil producers that prefer to avoid using dollars and are not ready to accept that being paid in yuan for oil sales to China is a good deal either. Alex McLeod, head of research at Gold Money, told Nikkei. Now, let's think of another thing here. You know for a fact, because we've already seen this, we've had banks admitting to it as well, like, was it Deutsche, right? Yeah, they rigged the silver market and the gold market, the London PM fix. Well, we finally admitted it. CFTC, you had a multi-year investigation. You said you saw nothing. They just admitted they've been rigging the silver prices. Now what? Oh, yeah. Whoops. So how do they rig it? They print futures contract paper that says it's backed by this amount of, in this case, oil. It's backed by X number of barrels of oil. And at any time, supposedly, anyone who holds a futures contract can pay it off in full and say, bring me the oil. Same with corn, commodities, right? All commodities, oil, corn, precious metals, you name it. But we noticed an interesting thing, that the number of futures contracts could explode to an absurd amount in which we knew for a fact, looking at their own vault information, that that amount of silver or gold doesn't even exist. So how do they have that many futures contracts out there, each for X number of ounces? Doesn't make sense, right? Simple math, we figured it out. Oh boy, it was hard. That's how we in America set the price of oil every day. It's not OPEC, it's not Venezuela, it's not all the fighting in a pipeline in Afghanistan. No. Matter of fact, it's not even Hurricane Harvey that just went through Texas. Nope. Not that either. And you saw prices spike, nothing to do with Harvey. Harvey was just an excuse. It was the futures contracts that spiked and the price went up because of Harvey happening. No oil, but there were some shortages. I get it. There was a few instances of that because the freaking area where it was hit or whatever. And it is an oil producing area. But again, in a real world, right? In a real world, that would be true. Hey, we have a production problem. Oil prices have gone up. But in this world, it doesn't matter. They could have sold off. They could have done the same thing, printed out a bunch more futures contracts, and then flood the market with sell orders. Not enough buyers. Price plummets. During Harvey, after Harvey, the hurricane, doesn't matter. So my question is China, since if the globally we'll say oil producers are going to start looking at China to set the quote-unquote benchmark, are we about to find out an interesting thing, such as these oil prices have, ultimately jumped up pretty majorly. They've been completely low, stable but low, for several years now when the United States had their little futures contract stuff going on that was setting the price of oil because it was in dollars. Now that China took over, everybody's getting paid more money for some reason, which is going to then put a spotlight over on America. Hey, how is it that they take over and prices are higher for everybody, all the producers, everybody's happy, when you guys handled it? You kept it artificially low. Now Venezuela all of a sudden is making money again. They're going to, no need to riot and overthrow the government, and they're making money again with their oil. Thanks to China, right? $100 a barrel, let's say. Then all of a sudden again, hey America, you got some splaining to do. How is it so low? And they're going to see any person with half a brain cell in their head. Oh, you guys set it with these futures contracts. The same way, of course, China is. So the next question would be, is China going to just take over the role that we were doing it and do it themselves? The same way. Oh, prices are up too high. Let's print out a bunch of futures contracts. And then flood the market on sell orders on those and cause the price to come back down. Or is China going to say, no, we're not going to do that. This is going to be a real true free market and whatever happens, happens. again, remains to be seen, but there's definitely enough money out there which could flood into it or flood out of it and cause the price to move, which then may make you say, well, I guess some intervention by the government or Fed or whoever was good after all. Then that brings up a whole other discussion. Why do they hold the price down too low? You're picking winners and losers. You're devastating people's lives while maybe enriching other people's lives, right? See, a lot of problems we have to talk about. Anyways, that's all I got for you. Take care.